In private equity versus public equity, I was really surprised to learn like how many companies there are in the private space versus the public space. And I know that's something that clients tend to appreciate. I think there's something like 10,000 public companies versus, a couple thousand, 10,000 private companies versus a couple thousand public. So just like the opportunity for investment is so much more broad. I know clients have really appreciated the private equity allocations in the portfolio for purposes like you just described, diversification of risk and return.
No question about it. They just operate differently from each other, where the public entity has analysts that are reviewing them, headlines that are, every day you can read about a different company. Private companies don't have to operate that way because they don't have analysts overseeing them. They don't have exposure to the media the way public companies do, and therefore they can make decisions not based on next quarter's earnings, but on the long-term value of the company. Much more interest in how is this company going to look down the road than next quarter when the analysts report earnings.
Interesting. I hadn't really thought about that. That's a really nuanced perspective.
Yeah, I think another benefit is with privately held companies, you're not having all the day traders going in and out and trading them constantly and being repriced every minute of the day while the stock market is open. Their value is much more stable and kind of valued at certain points over time versus being constantly traded and being influenced by things like headlines and news, as Janet mentioned.
And their portfolio of private equities can be well diversified as well, with the types of companies, the location of companies, and the stage that they're in, more mature versus newer types of companies.